welcome to this edition of BizWatch. I'm Qingyi. Shanghai is to target single-digit economic growth for the first time in more than a decade. The city plans for an annual GDP increase of 9% for the next 5 years. Shanghai also plans to decrease the energy required to generate that growth. Mayor Han Zheng announced the targets on Sunday as he delivered the draft for Shanghai's 11th five-year plan to more than 800 members of the Shanghai People's Congress. While Shanghai sets its target for the next 5 years, China as a whole hopes to propel the momentum of economic development further. The GDP growth for the past year is estimated at 9.4%. And what about 2006? This week I interviewed Jonathan Anderson, head of Asia-Pacific Economics of UBS. He offered his forecast for China's economy in 2006. When we talk about China's economic growth in 2005, we think about terms like RMB revaluation, anti-dumping, and also the real estate market, banking reform, etc. So when we do a forecast for the economic growth or economic outlook for 2006, what are some of the keywords that we can define here?
The first keyword we need to think about is construction and infrastructure spending. One of the things we saw in 2005 was a virtual recession in property development and infrastructure. Remember that when the Chinese authorities tightened, those were the areas that they tightened most aggressively. But in the last half of 2005 and now going into 2006, we see a recovery in activity. So that's the first big theme we like to think about. More spending on infrastructure, more spending in construction. A lot of the projects, or some of the projects that were canceled over the last 2 years are coming back in. We see a recovery. That's going to be a big driver. The second theme we see is a better outlook for steel, for machinery, for some of the basic materials, heavy equipment. A lot of these people have had problems in profits, falling profits over the last 2 years because of excess capacity, overinvestment. The next 12, 18 months, probably a recovery there as well because of more spending in construction, infrastructure. Also because of the tightening on investment. So new capacity growth lower means better profits going there. That's the second theme we look for. The third theme is continued pressure on the currency. We expect very, very gradual appreciation. No big moves, so very moderate, maybe 2-3% over the next 12 months, but really day to day. So no one-off jumps like we had before.
Right.
For the textiles and anti-dumping, I think there things are going to be a bit easier. On the textile side, we have seen agreements now in place with the EU and the US, and I think people are starting to feel more comfortable with the pace of textile growth. On the other areas like steel and like chemicals and like materials where China was exporting a lot, that's already slowed down because of the recovery in demand at home now and because we don't have as much new excess capacity growth. So over the next year, I think those problems will start to go away. Inflation is likely to come back. A lot of people in China talk about deflation pressures. I think by the second half of 2006, we're going to see a bit more inflationary pressure in China. Two reasons. One, I think food prices will probably be on the rise again because of the harvest situation. Last year, very good harvest, so food prices were flat or falling. This year, I think they'll start to pick up. Second, I do see, again, a better supply-demand balance in things like steel and materials, sort of heavy industrial inputs. And that actually will probably mean rising prices. Not in the first half of the year, but in the second half of the year. I think that'll be a theme.
What about the financial services in general? Because by the end of 2006, China will have to fully open its financial services market.
I don't really worry about the opening in end of 06, 07. And the reason I don't is that most foreign banks are already here. If you look at the last year and this year, the big theme we see is the strategic investors. Everybody wants to buy in. They want to buy into the big four banks. They want to buy into the second-tier banks. So when you talk about the big foreign banks like Citibank or HSBC or Standard Chartered, etc., probably when they open up in January 1st, 2007, these banks are not going to spend most of their time and money opening new branches and trying to go in under their own flag. What they're going to be doing is trying to buy strategic shares in existing players. So instead of what we call big greenfield competition, new branches, everybody trying to put in new investment. I think the real competition is going to be to try and get strategic shakes and mergers and acquisitions among the existing banking system. And that's a process that's already going on. And I see a lot of aggressive action now, people trying to, jockey for shares, maybe buy into the joint stock commercial banks, the second tier, the third tier. That's a very interesting story.
Talking about mergers and acquisitions, we saw a lot of M&A activities, especially overseas M&A activities in 2005. Do you see this continue in 2006, and what industries will those activities be focused on?
I do think it will continue. I think it'll be a bit quieter, though. Not because less money. You'll still see a lot of funds flowing out of China. China's very active in emerging markets around the world. I mean, you've got Latin America, Africa, Middle East, Central Europe. I mean, Chinese companies are buying in resource areas. I do expect a lot of outward investment from China, but a lot of it will be not under the table, but very quiet in the smaller markets.
More in a subtle way.
More subtle, exactly.
Is there any correlation between the fact that they're focusing on mergers and acquisitions in the resource areas and the fact that Chinese government is trying to transform China from an export-led economy to a domestic consumption-driven economy?
A bit. I mean, if you look at the growth in the Chinese economy altogether, I mean, the one astounding fact about China is how resource poor China is, right? I mean, you have 1.3 billion people. As you boost domestic consumption at home, as you really build investment and infrastructure, you're building factories, building retail networks, communications, China does increasingly need to get resources from abroad. When it was just the export sector, you were bringing materials in, you process, you send them out, that was a bit of a different story. But now with all the heavy industrial activity in China, obviously resource constraints and resource availability a big concern.
Do you think such a transition or transformation in the economic growth model can be realized in 2006 or in the near future?
I do. The surprise in China is actually how strong consumption already is. If you look at the last few years, consumption growth has been 10-11% in the retail space. If you look at overall consumption in the GDP numbers, 7-7.5%. Right? These are good numbers, so consumers are already spending. If you add in things like cars and homes especially, residential investment, that normally doesn't get into the consumption accounts. We call that investment, but that's also driven by households. And Chinese households are spending like crazy on homes over the last 5 years as well. Once you add all of that together, the consumer's already very strong. So what I really look for is simply a continuation of very strong consumption as that starts to take over as the main driver in China.
Mr. Anderson added that although a slowing U.S. economy might reduce the demand for Chinese exports, a rebounding Japanese economy and a fundamental understanding with the EU would influence China's economy positively in 2006.